Welcome back to Alpha Recap, your daily market postgame with StockAlpha.ai. We're fresh off the close, and today we had a clear risk-on tone to unpack. As always, if you have questions, you can reach us at StockAlpha.ai.
Hey, great to be here. Big day in the tape. Lots to dig into. So, what really stands out here is how broad the rally felt despite tech leading.
Right. Let's kick with the big picture numbers first. The S&P finished up about 0.2%, the Nasdaq 100 jumped about 1.8%, and small caps, the Russell, rallied roughly 1.9%.
That Nasdaq performance grabbed headlines, but that small cap strength was the other headline for me. It suggested confidence in domestic demand, not just a skinny tech rally.
Exactly. When the tech-heavy index leads and small caps also rise, it reduces the narrow market worry. Analysts note that this mix can be constructive if it holds, but it needs confirmation across breadth measures and sector continuity. So why did we get that risk-on tone? Several drivers: company-specific news, revived deal chatter, and CapEx signals in pockets, plus a market read that the Fed story felt dovish to neutral enough to tolerate higher beta names.
Yeah, that tracks. And traders describe the day as a tactical reaccumulation of growth and cyclicals after a period of choppy breath.
Let's break sectors down. Communications and media were active. Ad spend optimism and M&A chatter lifted both the big names and mid-cap content players. That helps the Nasdaq 100 performance.
Materials and mining were mixed but constructive. Commodity-linked names reacted to energy dynamics and China-related demand notes. Metals geared toward an industrial recovery did better than defensive peers.
Unusually, utilities posted gains, but not the usual rate-sensitive uplift. It was renewable-linked utilities getting bought after project announcements and financing activity. Investors seemed willing to pay for regulated cash flows with green optionality.
Interesting nuance. So it wasn't just flight to safety in utilities. It was selective, growth-adjacent utility buying.
Correct. Real estate also saw selective deal flow in industrial, logistics, and specialty REITs. The market was discriminating. Assets with visible rent growth and low vacancy got attention, while rate-sensitive property types lagged.
Industrials rallied too. Some strong corporate updates and order flow commentary. Aerospace and defense suppliers were particularly active after positive news flow in that supply chain.
Regional banks were a mixed bag. Coverage and selective upgrades created pockets of outperformance, yet the group overall stayed range-bound as traders balanced credit concerns with deposit dynamics.
And energy. It was a story of volatility, with oil price interplay, EV adoption cadence, and capital allocation chatter. Pockets of strength showed up where company catalysts existed.
Cybersecurity names stood out ahead of key earnings for some vendors. Subscription growth narratives and secular enterprise security demand helped mid-cap names rally in that space.
Quick reactions. Strong tech, selective cyclicals, renewables-led utility strength.
Let's call out some individual movers. Semiconductor infrastructure names and a couple of big OEMs had notable days. Marvell popped on data center optimism, and Dell saw strength tied to hardware and server demand commentary.
Regions Financial was mentioned in the banking wrap. Selective interest driven by analyst notes. It wasn't a blanket banking rally, but some names got singled out.
Auto parts name AutoZone had its worst day in about 4 years. That felt company-specific. Looks like a reassessment of same-store sales momentum in the sector.
Oof, not what you want to see in a retail name like that.
American outdoor brands also moved on coverage notes. A reminder that analyst attention on small and mid-caps can create outsized volatility.
Space-related stocks rallied on SpaceX pre-IPO chatter, which spilled over to suppliers. The IPO rumor mill still moves markets, apparently.
And an interesting growth tidbit. Pony AI's robotaxi revenue reportedly quintupled. That kind of acceleration lifts sentiment for autonomous vehicle and robotaxi-themed names, even if the companies themselves are small players.
Crypto-adjacent equities were mixed. Token price action diverged from some public equities, so the link there wasn't uniform.
Turning to macro implications, there weren't headline policy moves, but the market positioning tells us something. The combination of tech leadership and small-cap strength implies traders were comfortable taking risk ahead of upcoming economic prints.
Analysts note 2 ways to read that. Confidence that inflation is trending down and the Fed will remain data-dependent, or a tactical focus on near-term earnings and sector catalysts with tolerance for a higher-for-longer rate backdrop.
Either interpretation is plausible. The big risk is the data prints themselves. Inflation surprises or stronger than expected labor numbers could quickly reintroduce rate sensitivity and shift leadership.
Short reaction. Watch the inflation and jobs prints closely.
From a technical and market structure lens, NASDAQ outperformance is constructive because it can attract momentum flows and option activity. Small cap strength tends to precede broader cyclical recoveries when sustained, but traders will look for confirmation across breadth measures.
Volume was typical for an end-of-month session. Not huge overall, but with pockets of above-average activity in semiconductors, regional banks, and space suppliers tied to the day's news.
So what should listeners watch for the next session? First, the next slate of inflation and labor indicators. Upside surprises on inflation could reintroduce rate sensitivity. Softer prints would likely keep the risk-on tone intact.
Second, Fed speakers. Nuance matters. Comments that sound patient versus prepared can swing expectations and sector leadership.
Third, earnings and guidance, especially in cybersecurity and enterprise software. Incremental signs of corporate IT spend stabilizing would support the recent tech advance.
Fourth, any concrete updates on big space IPOs or M&A. Those headlines can rapidly re-rate suppliers and thematic names.
And finally, credit signals from regional banks. Fresh insights on deposit flows or credit quality will have outsized impact on financials and small cap indices.
Historic note. The pattern of tech leading while small caps rise has precedence. It's worked before when macro prints cooperated, but sustainability is the question.
Bottom line, today was a clear risk-on session. The NASDAQ 100 led, the S&P posted a solid gain, and small caps strengthened materially. That breadth and sector rotation into communications, renewables-linked utilities, industrials, and select financials shows incremental willingness to push beyond the narrow tech rally.
Key takeaways. 1. Breadth improved, not a one-trick rally. 2. Company news and deal flow still matter a lot for day-to-day moves. 3. Upcoming macro and Fed commentary will be the next major test.
And a reminder, this is informational analysis, not investment advice. Analysts note momentum and risks. Decisions should be based on your situation and a professional advisor if needed.
If you liked this breakdown or have a question about anything we touched on, head to stockalpha.ai. You can ask us directly in the Q&A feature and we'll answer live.
For more market analysis and deeper charts, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back after the next close with another recap.
Catch you tomorrow. Right. Stay curious.